Hi, I'm Greg Attamore, your host for Experts of Southern Nevada. And today I'd like to invite all of our viewers, all 250,000 of you by name, but I don't know all your names, and also about 35,000 viewers that are in the Las Vegas Strip. And since October, we've been in the, a lot of our viewers might not be aware of this, but we're reaching out to people in the hotels, the Aria, Bellagio, Caesars, Encore, M Resort, MGM Grand, the Mirage, Palazzo, Palms, Planet Hollywood, the Venetian, and the Wynn. So we're reaching out to people that are coming from all over the world that come to visit our city. And so we welcome you all. We're glad that you can share with us. Today we have another real estate subject with an excellent guest. I brought back for a second time Audra Stevens from RMS Mortgage. And she's the best mortgage person that I know, and she handles all my transactions. And Audra, welcome to the show.
Thank you, Greg.
And what's going on with the financing market today?
Well, it's it's always hot in Las Vegas, so that's a good thing. And our market value is going up, quite significantly in the last couple years. Mm-hmm. So that is really great because it brings a lot of buyers. It opens up the opportunity for people to buy and actually get some equity in their house again. Mm-hmm. Or a lot of investors that come in, they want to buy. It's a really great price to buy something and then turn it over and make it a rental. Mm-hmm. So those are always some options as well for the people that are watching from out of town. Yeah. But mostly the good news about the market increasing so quickly is that a lot of these clients that have bought houses, in the last 2 years, their houses have gone up probably a minimum 20-25%. Mm-hmm. And with those percentages, it will allow them to refinance their home and possibly get out of that mortgage insurance. And it could literally drop their payment by a couple $100s a month. Well, and even get some cash back.
Wow, so that's a conventional loan. Does that also apply to FHA where they have the mortgage insurance, or is that locked in for life?
The mortgage insurance is locked in for life on FHA. So if a person has an FHA home loan, if they are eligible to refinance it and go into a conventional loan, that's where they would then drop the mortgage insurance.
Well, so a lot of viewers don't realize maybe they bought a home a couple years ago and they've maybe put 5% down and they have this private mortgage insurance on it, or like you said, FHA loan that has that 30-year insurance that you're paying for 30 years, maybe 100, 200 or more a month.
Yeah.
They contact your office, you can tell them if they're eligible to lower their payment a couple $100 a month.
Absolutely.
Nothing wrong with that. And of course, the interest rates, if you're paying more than 4.5 or 4 3/4, it might be a good idea to contact a loan officer or Audra.
It's a really great time to refinance because, again, historical lows, I don't know if people really understand what that means, but people kind of take for granted when the rates are in the 4s or even the low 5s because those rates didn't exist, 10 years ago or, 15 years ago. They were much higher. And now we're into rates at 3.75 for an FHA home loan. So you can get a VA loan for 4%. You could even get a conventional loan for 3.99. Yeah. I mean, you may have a lower term, like 15 years, but even at a 30-year term, you can get in for 4% on an FHA. Yeah. That is a really, really low interest rate, and you'd be able to write off the interest too. So it's really a win-win situation.
Yeah. So if you're sitting on a 6-7% loan, one of my clients, I had them call you this week, they're refinancing at a 15-year loan at 3.75,
yeah,
3. And they're paying 6.5 now. So they're getting a 15-year loan, and you could save a lot of money. I know if you look at a 30-year loan and you're paying 6%. Yeah. You're really not knocking down that much principal until you're into 15, 20, 25 years. So
exactly.
It's a great idea to maybe refinance to a 15-year loan, get your home paid off, and then go on a cruise or take a trip.
Right. I mean, it could even, it might only even raise your payment by $100. $100 to shave 7 or 8 years off of your home loan is literally saving you thousands of dollars. I mean, $50, $60, $100,000 just by refinancing. Yeah. I mean, you could barely save that in that amount of time, so that's a really good way to actually save money for yourself.
Right. A lot of people that are sitting on homes that you've owned a home for a while, if you got in touch with a good lender that can help you refinance and maybe put on a shorter term loan, you could literally save hundreds of thousands of dollars. And this is something that usually you don't even have to come out of pocket for. I mean, aren't most of the costs rolled into the new loan?
Absolutely, yeah. The typical cost for a refinance is about 3% of the appraised value, and those fees are rolled right into the loan. So there's literally no out-of-pocket expenses. Now, if you chose to keep those expenses out of the loan and not finance them, you have that option too.
Okay.
But why part with your money if you don't have to? You might as well let the market basically pay for your refinance by going up again.
Yeah, so putting that into perspective, let's say you have a $100,000 mortgage and you're paying 6%, so you're paying $6,000 a year on interest. So it's $500 a month. If you were to roll that at 6% into 3.5%, you'd get a new loan of $103,000 thereabout if you financed your loan into it, and your payment might drop down like $200 or something a month.
Yeah.
So literally, a $100,000 mortgage might be paying like $500 or $600 a month, including taxes and insurance. Way cheaper than rent. So
Way
refinancing
cheaper.
is a very good option. People should be looking into it, especially if they have a rate that's over 5.
I actually have a mailer that's going to be going out, so if people want to look out for it, I'll have all my contact information in there. But it's just going to be talking about refinances, like what their options are. A lot of people don't even know if they could refinance because they still think that, they still hear out there that the market is upside down or their house isn't worth as much as they owe.
Sure.
And but for the people that got in over the last couple years, their house is going up.
Oh yeah. What about the person that owes $300 and their home's only worth $150? Is there some refinance HARP money or something still there?
There's a few of those HARP loans left. Basically, those are loans that are owned by Fannie or Freddie, and if you're eligible for that product, you can simply go online, or you can contact me, and I can tell you if your house is eligible, if your loan is owned by those two entities. And if it is, then we can refinance it, not using an appraisal, just taking the balance and refinancing it for a lower rate. I myself actually was eligible for that, and I just did it about 2 months ago. So there's still loans out there that are with Fannie and Freddie that are eligible for that. And just like you're saying, I got a 3.75 for myself on a 15-year. My payment went up by $130, but I shaved off 10 years on my mortgage, because I only had the house for 5 at that point.
Wow.
So, that's a really good feeling to do that, and people should just know that those options are out there.
Does that apply to FHA loans too? Is that Freddie and Fannie? I know that
they're conventional loans with those two. Yeah. The FHA loans, though, you can do a rate and term refi. It's called a streamline refi, where we don't verify any income, we don't pull an appraisal, the costs are very low, and all you have to do is just basically show us that you've been making your mortgage payment for 12 months on time. And then whatever the going rate is on today's market, you can refinance for that rate.
Okay,
so if someone's at 4.75 from 2 years ago, they might be able to get into 3.75 or go from a 30 to a 15 at virtually no cost.
So for FHA loans, if you have an FHA loan and you're interested in this, please contact me or contact the show, or Audra. We'll be putting your phone number up in the teleprint. And you mentioned Freddie and Fannie, and in being in the business for 35 years, we hear these things in layman's terms, what is Freddie and Fannie?
Well, Freddie Mac and Fannie Mae are two entities that really are the founders of the guidelines that we follow to sell these loans, because they typically are the banks that buy most of the product. So we underwrite to their guidelines. Now, there's a lot of other banks that you may see your loan going to, but they're kind of like the grandfathers of home loans. And so we use that term Freddie and Fannie, like you said, very, very liberally, but it's just because it's just little bank jargon. So
loans are kind of bundled up and they sold them to clearance through the government, that way money keeps moving, the banks have more money.
If we follow their guidelines and we underwrite to those guidelines, then the other investors that may want to buy a portfolio of mortgages, if they know that we underwrote to those guidelines, they know they're good loans. That's kind of how it works.
Okay, good. Another thing that I've enjoyed, and it's kind of like you've been like a tailor, each person has their suit tailored to their, sometimes the financing needs to be tailored. We have people in our city a lot who have a lot of income from tips, or it's hard to substantiate. And I don't know if their stated income will ever come back, or if there is in some cases, it may be just being discussed. But what about the people that have good income? Can they buy a home? Maybe they don't show it all because they get tips for.
The way that it works now, unfortunately, Greg, is now the government has implemented a tip compliance. So no matter what, the people that make tips, they're going to have to claim a portion of those. If they only claim what the government makes them claim, then that's only the income we can use. If they claim more, then we can use that income. But we always take, for anybody who uses tip income or has it, whether it's commission, tip, or self-employment, we always have to have a 2-year average of their income. So if they know that going in, let's say they know next year, hey, I want to get ready to buy a house, but I'm a tipped employee, they would start to claim a little bit more on their tip compliance rather than just the minimum, because they need to show more income. If you want us to use the income, you have to show us that you make it.
Right. And so
it's kind of a catch-22. You can't like avoid the IRS and not pay your taxes and still get a great house. So it's you got to just, you know, bite the bullet at least for a year, get your house, and then you can go back to claiming whatever you want to claim.
Yeah, I know. I recently sold a home for a waitress at the Bellagio, and they put down like $200,000 or $300,000 down, and you know, the income's steady income, but they've declared it, and as long as they can track it, I guess, and then it's allowable. So they do need to do their tax returns. So I suppose somebody wants to get in the market, but they've had a foreclosure or say a short sale. Suppose somebody short sales their home, they want to get an FHA loan. What is that, 3 years? Wait period?
It's 3 years, and so many people have them that the guidelines are getting a little bit looser and a little bit looser as we go along. But the typical guideline is, if it's a short sale, it's 3 years from the short sale date. Okay, for FHA.
From the closing of the short sale?
From the closing of the short sale, 3 years from that date for FHA. For VA, it's 1 year.
Only 1 year for VA.
And for conventional, they could get in after 2 years of a short sale date, but they have to put down 20%. So if you want to wait 3 years, you can only put down 3.5%. If you don't want to wait 3 years, but you want to go conventional, you put down 20. Those are really your two options. And then foreclosures are a little different, and bankruptcies are different. Those are three separate items that we always have to consider. BK is 2 years for
2 cases from
FHA.
Chapter 7 or 13 or 11, whatever the case. Wait 2 years from the discharge date of the bankruptcy, and then you can get them financed.
Right. And then, but if you had a foreclosure, you have to wait 3 years from the foreclosure sale date. Okay, and it's only eligible for FHA.
Okay, so if you lost a home to foreclosure, you're going to wait 3 years and go FHA. FHA is 3.5% down and more liberal guidelines, so a lot of people prefer to use FHA anyway.
Yeah, exactly. But sometimes, just so this is something that's really important to your viewers. A lot of times people think that if they had a foreclosure and then they had a bankruptcy to, you know, get rid of the debt, that the foreclosure is gone. The foreclosure is very much still there. It's still a foreclosure. They just got rid of the debt with the bankruptcy. That's all the bankruptcy did, was just get rid of the debt. So sometimes when you're taking an application, you'll ask them, do you have any short sales, any foreclosures, any bankruptcies? And they'll go, well, I had a bankruptcy. You're like, oh, okay, no problem. What was the discharge date? But what they didn't understand is that they did have a foreclosure. Sometimes they get confused and think that the bankruptcy supersedes the foreclosure, and it doesn't.
Still make it go away.
Still there.
So somebody just has a bankruptcy without a foreclosure, they wait how many years?
It's 2 years.
2 years from the discharge date.
Yeah.
And you mentioned that if you have a foreclosure, it's 3 years from the sale date. So suppose somebody gets foreclosed on, they go, the bank takes their home, but the bank doesn't sell their home for another year.
Yeah.
So the timer doesn't turn over until the foreclosure property is sold.
That's right.
So maybe so usually it will be more than 3 years if they
it
have
could
to market
be.
the property.
Yeah, it could be. It depends on when the bank actually took it out of their name. And so, you know, a person might have moved out, you know, like you said, in January, but the bank didn't actually transfer that deed out of their name until December. So it's 3 years from December.
Okay. So we want to avoid foreclosures. That's where you call me, real estate coach.
Right.
I try to keep you out of foreclosure.
You can short sell your house nowadays so easily, and by just providing a hardship, that why have a foreclosure on your credit if you don't have to?
Yeah. If you're getting letters and you're getting threats or you're getting notices put on the door, please read them, consult with an attorney, consult with a realtor or lender, find out what your options are. There's a lot of remedial programs out there to help people get back on your feet. It's in the interest of our overall economy to help people mitigate these debts. And a short sale, a lot of times you can walk away from anywhere from $3,000 to $30,000 to relocate. And so there's a lot of stuff that is happening now. That's
something that's really interesting. If with short sales, if you do a short sale without ever going delinquent on your home, you could actually re-enter to the market again, buying a new house literally 1 day after short sale.
That's amazing. Is that a 20% down generally?
No, it's regular FHA.
Wow,
it's
so
just because they didn't go delinquent.
Right.
It's when you go delinquent for, you know, a year or two that it really hurts your credit.
Yeah. I've got one going through right now, and they forced the seller to go delinquent. And we tried to time it to where we closed by the end of last year, and therefore to protect my client from the Mortgage Debt Forgiveness Act, which, as you know, has not been approved or disapproved yet. I guess they're going to have to meet and discuss it, and there's quite a bit of support that it'll get passed, but we never really know what
what's going to happen.
Insightful politicians are going to do up on the Hill, but hopefully that will be extended. That will give more relief to homeowners that do short sales, and hopefully it'll be retroactive to January 1st is what everybody
that would
is
be
asking
nice.
for.
Oh, yeah, that would be nice.
Yeah, it is, because a lot of people are still in that pipeline trying to do short sales. So
yeah.
Well, it's good to know that people have hope after having a hardship, because a lot of people, many people, especially in Las Vegas, Nevada, we're one of the hardest hit places, and a lot of them are recovering again. We're seeing the economy getting strong again, and unemployment going down. The new hotels are coming here, a lot of construction, and there's
there's a lot of growth. I mean, it's really hopping right now. So, I mean, people, there's a lot of help out there, like you said, and I'm one of the lenders that has a lot of different programs. Even if I can't help them, I could maybe give them some guidance to, show them, this is what you're going to have to do over the next 6 months or 8 months, or this is when you're going to wait, and I could still get you approved on a credit approval or income approval. We just have to wait for that date to expire. So they should start planning now if they have any dreams of becoming a homeowner again.
Exactly. It's always good to do a scouting report. I always advise my clients to get in touch with Audra or someone else that they trust to find out, hey, what type of hiccups are going to be down the road? What type of things do we need to know about ahead of time?
Right.
That we can deal with them. If there's something on the credit report that might be disputable, might have been paid, but they won't take it off. We've had problems where people have paid a debt, and one of the even cellular phone bill or something, they notoriously will report.
Yeah.
And then sometimes it's hard to get the derogatory taken off the credit. So by doing a free consultation with you, they could find out ahead of time if there's something there that needs to be eliminated, eradicated, and you can help them with maybe just advising them how to repair their credit if there's some issues. And the thing I like about Audra is you have some flexibility. You can go to a lot of different lenders, and you can find a program that'll fit their needs. Where they've been turned down 3 or 4 or 5 places, you go and you could sometimes find a way or navigate a way to help them obtain that home of their dreams.
Yeah, and we also, what's nice about our company is that everything that we do is local. I mean, our underwriters are right there in our office. The owners of our company are right there. Our doctorars are right there, our funders. So we, like, when you walk into our office, we're there to help and get questions or answers to your questions right then.
Oh, yeah, that's very good. What's going on now with down payment assistance? I hear there's some programs coming out that help the buyers even get their down payment and then some. Yeah.
So as long as they qualify for your standard FHA or conventional loan, which that's where you should start. You always get pre-approved first.
Oh, yeah.
And then if you're eligible for those programs, your lender, I always look for my customers, like if they come in and say, well, I just want an FHA loan, I can say, well, you are eligible for this product. And those products can give you sometimes $15,000, $14,999 towards your down payment, which is a lot of money for free.
Oh, yeah.
After 5 years, it's totally forgiven, so they don't have to pay it back. And they just keep the house for 5 years. Got to be a primary residence. They have to meet, like I said, the normal guidelines, 640 for the FICO score. Their debt-to-income ratio is the part where it sometimes makes people qualify or not qualify. So that's why it's important for a lender to look at your ratios, because people wouldn't know how to calculate that themselves unless they were in the profession. So start there. I mean, there's free money out there. Why not take advantage of it? Well, there's lots of programs. There's Clark County Home. There's North Las Vegas Home. There's NSP. There's NSP 1 and 2. There's the WISH program, the LIFT program. I mean, that's a lot of programs right there, and every single one of them offers 15. What I mean by that, you can't combine them all, but a couple of them you can. You might be able to pair up LIFT with the NSP 1 or LIFT with Clark County Home. That could be $30,000.
Wow. So
it's a lot of money. So typically if you could qualify for 1, you'll qualify for 2. And that's where, you could buy a house that was $200,000 and really be financing $170,000. Wow. That's a huge difference in what your payment's going to be.
Well, that's right there worth watching the show right there. You get $15,000 to $30,000 free money. Just got to stay in the home.
5 years.
5 years, so 60 months, pay your payments, and Is that
and qualify for the program. And the thing is that we pre-qualify you to make sure you kind of fit within the guidelines. The company that actually gives you the money is a county or city company, nonprofit organization. They're the ones who actually give the money. And so you still have to get pre-approved with them as well. But we wouldn't even send you over there if you didn't somewhat fit in the guidelines. So that's what we're doing first, is kind of doing that footwork for them so they don't waste a lot of time. Because down payment assistance, they have to go to an 8-hour class. They have to show that they're serious about buying a home. They have to invest a little bit of, time and understand buying houses and all that. And so that way it's a give and give back, give take type relationship with the city and the county, because the city's doing this because they don't want these houses to be vacant.
right?
They want people to own. They want people to be homeowners because it takes pride in your city when you're a homeowner.
Sure.
So that's why they have these programs.
Yeah. So that's a great program. I know I got affiliated, I think it was NSP a few years ago. They had the broker education and the lenders come in, and then we take advantage of that. That's why it's so important to get with a local realtor and a local lender that knows these programs, because maybe you just walked into a bank somewhere, or Yellow Pages, or saw a billboard and just called someone up. The reason that it's important to deal with a lender like Audra, because she does so many loans for our company, and we know that you get a lot of business, a lot of referrals, that there's going to be future business. So there's always accountability, where if you do a one and done, you go to a lender you don't know and they get you the house, that's great. But with me, being in the profession, I need to know that my clients are really being cared for, that they're somebody that's competent and compassionate, that's really looking over the numbers, making sure that there's no garbage fees, number one, getting the lowest rate, making sure there's no unnecessary fees locked in. And you've been so good at that. Even when there were some people that didn't fit a program, you've always referred me to another lender who could get them in the best program, even though that meant less money for you, but overall you're helping people. And that gets out the good word that you're dependable and ethical, and that's what people want now. They just want people they can trust. So And then the back end of the mortgages is why I always emphasize it's good to get an experienced lender like yourself, because when things, sometimes people are told, hey, you're qualified for 175. You get with me, we find the best home. You're excited, I'm excited, everything's ready to go, you're already moved in, and there was just one little niche in the market somebody didn't really look at, and then all of a sudden the underwriter is not going to improve it. And then, so that's why I'd like you to have eyes on it, because that way you know ahead of time what they need, because you work with them on a daily basis. You know exactly what the underwriters and the processors are going to be looking for.
Yeah.
Yeah.
Well, that comes with experience. I mean, there's so many guidelines out there, and it's impossible to memorize them all. But just knowing the ins and outs of almost every single loan, it's easier for me to package a deal and structure it the way that, or know what some of the hiccups are going to be before going in. So that way, when we come time to closing, it's not like, hey, the underwriter didn't approve it. We would have seen that 30 days ago. Hopefully, unless something comes up at the last minute where, they quit their job or something, because that happens, so that's an unforeseen event.
Yeah, I know you helping one of my clients, Keith, right now get qualified, and he had a tax lien, so now he could go FHA, but maybe not conventional. Yeah. So we were finding him homes for over 400 now, because FHA rolled back their limit to what, 287?
287,500, which means that they could purchase a house for around 299, and then with the 3.5% down, that's a mandatory down payment. The loan amount would be 287,500.
Okay.
So they could buy something a little bit more than 300. It's just they can't finance more than 287,500.
So they need to have a little bit more down payment money if they want to buy something for 3.25. They might need to have about 35 or so in the bank.
Roughly, yeah.
But that's important to know the FHA limits, because that is probably the easiest way for our viewers most people to get a loan, especially first-time home buyers.
It is definitely the easiest way. It's got the most liberal guidelines. It allows for people coming out of foreclosure, short sale, bankruptcy to have another chance. So FHA is the way to go if any of those things have applied. Yeah, good.
And we talked about being an experienced lender. How long have you been doing mortgages?
I've been doing it for about 12 years now.
Mostly in Southern Nevada here?
Oh, yeah, all of it.
Oh, good. Yeah, that's good, because you got to know the local customs and what the market's like. And of course, you said earlier, I think we went up 28%. And do you feel that we're going to get a pretty healthy appreciation the rest of the year? What's your outlook?
I mean, always with supply and demand. I mean, if the demand is high and the supply is low, your values are going to go up. And until something changes, then yeah, I think it's going to be very great. You know, I mean, it's just going to continue to grow and go up. You know, I hope it doesn't go too fast because I don't want to experience a bubble again.
Right.
So, I mean, but you can definitely see that with the supply being down, that it definitely helps with the values going up.
Right, right. I think because the banks were a little bit suppressed on what they could do in terms of foreclosing, there's still maybe a little shadow inventory, but they're letting it out a little bit at a time, so that's not going to flood the market with properties and bring values down. So it's safer for people who own homes or are going to buy homes here to get into the market now. I think we've got more of a healthy market with supply and demand. There is a shortage of homes for a city our size, with 2 million people plus, and so I think that usually, I think there's about 8,000, give or take, available homes without contracts on the MLS right now.
Yeah.
So usually there's about 25,000. So,
right, so that's not a lot.
So prices should still be going up a little
Yeah.
bit, and so it's a good time to get in. We're still way below where the market was in 2006 and 2007 before the bubble broke.
Oh, absolutely, yeah. I mean, yeah, we'd have to go probably double ourselves right now to get where we were back then.
Yeah, I heard that some statistics this week that the median resale home was about 192, and so it's up from last year and year over year, and a lot of great things happening on the Strip. I've been watching the news developments. They're building parks and that links, and they got like shopping, and the old Sahara is going to open up this week.
Oh, is it? SLS?
Yeah, it's going to open. Yeah,
Okay.
SLS will open up, and right across the street on Sahara and Las Vegas Boulevard, it's going to be like I think it was 70,000 outdoor rock concert venue
Wow,
that we can
okay.
use. So that's going up, and then the Gentry Group, I think, is where the Frontier used to be and the Stardust used to be. They're putting like a $4 billion project in. So we're seeing cranes coming up. Las Vegas is booming. Swiss Air just came in this week. Edelweiss, it's a international airplane server, and they're coming into the new international. So we're bringing in a lot of the Swiss tourism, a lot of international tourism, conventions booming. I guess it's hard to keep up with what's happening in Vegas.
I know,
isn't it?
yeah.
Exciting
it's a place
city.
to be.
It's an exciting place to help people find homes and get them financed. What's the best way to get a hold of you? What's your email if people and your cell phone?
The best way to always reach me is my cell phone because I always have it with me. It's my phone number is 702-595-7159. And my email address is just my name. It's audra.stevens@rmsfunding.com.
Okay, I usually use the fund for you at Gmail.
You do, but it's because,
habit.
yeah. But that's for people that are sending me private information, their tax returns and stuff. I'll give them the one that's locked down,
Okay, we'll have William Young, our engineer here at the
Yeah.
station, put it on the bottom too for you. Well, gosh, it's really been a pleasure. Very happy to have you here. Very happy to have you on my team.
Yeah, thank you,
And
Greg.
I get nothing but great reviews from my clients. They're very tickled and very pleased with your services. So we're glad to have you back on, and hopefully we'll have you again soon.
Yeah,
thank you so
thank
much, Audra. Audra Stevens. I'm Greg Adamore, your real estate coach, right here on Keen TV every Tuesday, 9:30 a.m. and 5 p.m. We'll look forward to seeing all 250,000 of you next Thursday. Thanks. Have a great day.